The US dollar is in big trouble and an economic war is brewing.
Wow, this billionaire is now shorting the US dollar. And this is probably the most successful investor trader of all time, Stanley Druckenmiller. And he says it's because the Federal Reserve or the United States government have weaponized the currency of the US dollar. Well, you might ask me, who is Stanley Druckenmiller? Well, do you remember George Soros? See, Stanley Druckenmiller was only 30-something years old when he was handpicked by the world's greatest trader investor, George Soros, multi-billionaire, to be his protege. And he has since managed this $10 billion fund and is worth multi-billion dollars himself. Well, he says he's very convinced that the US dollar is going down for two reasons. See, reason number one is that he says there is weaponized currency fears. What he means by that is that the US government has turned the US dollar into a weapon as soon as the Russian invasion on Ukraine started, which means that they took away the foreign currency reserves of Russia, which is something like $600 billion parked inside the US dollar, US Federal Reserve System. When they take that away, use it as a weapon against Russia and countries like China, Iran, Afghanistan, these countries go away and form their BRICS, and they want to use something that's not the US dollar. That's reason number one. Reason number two, he says, is on Fed rate worries, right? Fed rate worries. What he means by that is basically US dollar goes up when the Federal Reserve is hiking rates. But when US federal interest rates are going down, then basically US dollar also goes down. Well, that's because when the rates are going down, then you don't get a lot of high returns by parking your money in US banks or in US bonds. So therefore, US dollar is also seen as going down. He says he was really alarmed when the Federal Reserve just printed a lot of money to save this Silicon Valley bank, and also that stocks, US stocks, probably goes nowhere, right, in any positive direction for the next 10 years. It's going to be basically swinging up and down, kind of like Japan was in the 90s. And also, he says he's expecting a US recession. He's in the hard landing camp. Now, if you've been following my videos or following me on Twitter, you know that that's the view I've held for a long time, that the US is likely heading into major kind of economic trouble, either a recession or stagflation in a few months' time, which is what Stanley Druckenmiller is saying. So if that happens, then the Federal Reserve will be forced to cut interest rates, even though inflation could still be quite high in a few months' time, something like 5% or 4.5%, right? But when they cut interest rates, there is less reason for international investors to put their money in the US dollar, so the US dollar goes down. That part I agree with, but I think that's going to be temporary and probably just a small move, like 10%. The China and Russia BRICS worry, that's probably 5 to 10 years away from now.